Hello, everyone, and welcome to today's panel, which is looking at supporting the pandemic recovery for SMEs and innovation in business lending. We've got a big panel today and some key people who are very interested to hear from about business lending and what's happening in the market and innovations occurring in this space. With us today, we've got Tom Whitworth, Chief Product Officer for Finstro, Margot Birbeck, Head of Operations for Prospa, Samina Hussain-Letch, who's the Head of Payment Partnerships and Industry Relations for Australia at Square, Geof Alexander, the GM for Zip Business, and Patrick Coghlan, the CEO of CreditorWatch. Myself, I'm Amit Khan, Global Head of SME and Commercial for RFI Group. I look after our SME and Commercial Business Research based out of Singapore, and I'll be taking the panel through the key questions that we'll be looking at today. To start things off, I guess, talking about things from a macro perspective, I wanted to kick things off and discuss the impact of COVID on SMEs. Now, in the Aussie market, of course, we're in that phase of recovery now, hopefully, and things are starting to open up, at least in certain states. I wanted to open up with that general question around what's the impact been of COVID on SMEs, and what are some of the takeaways we've seen from businesses in terms of their needs, and really what are they requiring support on as they come out of the pandemic? So I'll open up with that question.
Look, we've seen some really interesting numbers. So CreditorWatch is pulling a huge amount of data from ASIC, the Australian Business Register, but also trade payment information from tens of thousands of businesses, of which a lot of them are small businesses as well. Majority of them are small businesses. We've seen some really interesting payment patterns in terms of essentially the turnover that you've seen of businesses. So a big drop away at the beginning of COVID, but then a nice sort of increase where JobKeeper filled the gap, particularly from sort of January through to March 2021 that we're in, which is, I think, indicative of coming out of COVID, the major cities opening back up, travel starting again, and then still everyone getting this nice surplus who was eligible. And then as soon as JobKeeper came to an end, we started to see additional lockdowns. And then, of course, July hit where the Eastern Seaboard was locked down. Turnover is sort of down almost 30–40% for small businesses compared to the year before, and the year before that it's even lower. That's been the biggest sort of hit. It's a real stark indicator that small businesses are seriously hurting. And then what we're starting to see is we're able to look into specific industries that are hurting even more than others. So in particular, retail, transportation, and of course hospitality, food and beverage. So we're really hoping to see, and we're already seeing green shoots, which is a positive of a turnaround even in the sort of week or two that Sydney has opened back up. So some really interesting insights coming out of our business risk index.
Yeah, that's super interesting. I can add a little bit of what we've seen in terms of our small business customers on the front line. We definitely would say that there's been more resiliency this year compared to last year. And during the height of the nationwide lockdown in April 2020, all of our data and insights definitely showed sort of big opportunities around building and trade. So, I mean, we've seen a number of our customers and in that space, in the building and trade space, doing exceptionally well. I was actually just working with a customer last week. We supported them in July, and they just came back again in October with increased contracts right up to 2023. So there are pockets or industries that we are seeing doing very well, but at the same time, especially in the lockdown areas, retail, hospitality, hair and beauty, all of those have taken a huge impact. So coming out of these lockdowns will be really important, supporting them as they restock, reopen, retool, really get their feet back on the ground.
And I can add a little bit from what we're seeing and what we're hearing from small businesses. It's about the 2 C's. It's cash flow and confidence, and they've been hit really hard over these last couple of months, and we've seen the challenges play out. But we're seeing the green shoots. We're seeing them come back, and we're seeing a real mixed economy. Like there's those who are struggling and have struggled through, but they're Aussie entrepreneurs, these SMEs, they're really strong and they find ways to get through. And we've seen those whose businesses have actually just boomed through this period, and their growth has just been things that would have taken decades, the switch to online, the opening up new markets for them. So we've seen a real mixed bag, and what we're hearing now is, give us the confidence. Like, as things are opening up, as we start to see these positive trends, how do we grow? How do we get that confidence? And how do we get the cash flow to support that?
It's funny, Geof, when you say the 2 C's, I thought you were going to, I agree completely with the cash flow side. I thought you were about to say certainty, because I had 2 C's as well. And I think the certainty is what builds into that confidence. It's probably the thing that's been lacking for especially our clients on the small business side as well. And for a lot of us is that lack of certainty over the last 18 months. And if you talk about a small business, they're trying to find out, should they invest in stock again? They've been burnt a few times, you know, when they tried to reopen and then it got shut down very quickly with snap lockdowns and that sort of stuff, which then hit that cash flow. So providing, where we can provide support, is providing certainty to those small businesses. That carries on from things just like cash flow support, lending support. Are we going to be open? Are we going to stay open? Just today, there was an article in AFR saying, you know, the pandemic's not over. This kind of certainty is what's going to build into that confidence that lets small businesses reinvest in themselves and rebound properly.
I'll just add one final letter then to the 2 C's and add a D. I think absolutely agree as well. Cash flow is critical in helping businesses get back. And through our research at Square, we found that 1 in 4 small businesses have only been able to access traditional forms of lending. And so making access to capital easier, fairer, and more simple for small businesses to help them get back on their feet is critical. And I know a lot of people around the table here are doing great things to enable that. And the other letter that, you know, comes after C is D, and we think, you know, digitization is going to be a critical part, and where it's difficult to provide certainty, making sure that we can help small businesses adapt and pivot. And we think digitization is really critical to enable that, whether it's a business that's never had to think about selling online and helping them set up an online store easily, or to be able to accept digital transactions in store, contactless. You know, mobile payments have skyrocketed during COVID. So we think enabling businesses and supporting them to make it easier to adopt a digital presence is going to be really important in this recovery period.
Cool, thank you. Some really interesting points. I wanted to pick up on a couple of those, and we'll touch upon those in a bit more detail as we go through. The first one being around cash flow and the second on digitisation. But before we get to those 2 topic areas, I wanted to talk about some of the behavioural changes we're seeing for businesses now. A lot of RFI data points to Samina's point about digitisation in terms of financial services usage. We are seeing an uptick in terms of more digital banking channel usage, as well as sort of internal digitisation within the businesses. But I guess the broader question for me to kind of get a feel for the macro picture is, what are the things you're seeing, perhaps from anecdotes or on the ground floor, in terms of changing business behaviour? How are things different beyond some of those fundamental issues that they're always going to face around cash flow and confidence? Like, what are the behavioural changes we've seen that are likely to continue on post-pandemic as we open things up?
We've seen this incredible resilience from businesses that have never expected to pivot to what they have to survive during COVID, and we expect those trends to continue. And we've heard a lot about omni-channel, and it kind of continues from my point on digital. And so we really expect this omni-channel experience to continue for consumers. An example is, you know, a lot of restaurants that had to survive during COVID, during you know, restricted trade periods, having to pivot to have an online presence. We expect to see that to continue as things open up, where consumers will have a choice, even when they are eating in a restaurant. In the restaurant, they'll have that experience of actually an omni-channel ordering process to make it COVID safe, but also just the added convenience of that process. So we absolutely expect that to continue. Another trend that we expect to continue as well is this, you know, this adoption of cashless, and we've seen this acceleration during COVID. You know, over a couple of years, what we expected to see over 10 years. And we did some research actually on cashless pre-COVID, where 1 in 12 businesses were running completely cashless. And then during COVID, we ran the same research, and that's now accelerated to 1 in 4 businesses that are going completely cashless. And I don't think anyone would have predicted that pre-pandemic. The last trend that we're seeing that we expect to continue is just this experimentation from businesses, and that's kind of the exciting bit. You know, businesses that are now doing takeaway cocktails that you know, used to be a cafe or a bar. You know, businesses that are now doing you know, weekly interesting meals that you can finish off at home. People are really enjoying that convenience, and we expect businesses to continue to experiment and try new things.
One of the things we've seen this really huge change in the number of startups, particularly if you compare sort of Sydney and Melbourne. So traditionally, Sydney has sort of operated almost on the same as a national level in terms of, you know, new startups. Melbourne would be, you know, pre-COVID sort of 12 to 15% above the national average. So it was almost the startup capital of Australia, and post-pandemic or post-JobKeeper anyway, they're now 15% lower than the national average. So I think, you know, there's been plenty of discussion around that sort of immigration out of Melbourne, out of Victoria, but in particular for startups, they've moved elsewhere, away from Melbourne in particular, which has been quite a unique sort of statistic that we found within the data. The other thing that we're finding is the sheer importance of the cost of, you know, commercial leases, for example, and even residential property, and how that's affecting regions. And I think Geof spoke about sort of 2 types of companies, from you know, those who are hanging on but they're resilient, which is great to see, and it will turn, and those who have done really well and embraced, you know, the technological change and the digitization. What we're seeing as well is the difference between the haves and the have-nots, and actually where they operate. So, you know, there's about 300 odd SA, what we call SA2 regions in Australia, and we've been able to rank them 1 to 300 to see, you know, which regions are doing really well and which aren't. And one of the big impacts that have come through is that, you know, that cost of living is one of the really important points that's put a lot of pressure on businesses to survive, whether it's commercial or residential. Whereas those that have got a lower cost of living, so if you compare, you know, Adelaide and the surrounding suburbs compared to, you know, Melbourne CBD, there's been this huge change in the risk profile of businesses. So that's opening up a lot of opportunity for businesses to go, cool, what's that region or that industry in particular that we want to look to engage with and target, and what regions particularly do we want to avoid, because, you know, they're extremely high on the probability of default at the moment.
Some interesting changes that we're seeing in more of the B2B space, so in the large wholesalers selling to small businesses as opposed to just small businesses selling to consumers. There was some interesting data that RFI did for us actually pre-pandemic, which said that 79% of small businesses use their supply trade terms to manage cash flow. A lot of what we're seeing right now, talking to large wholesalers who sell to small businesses, is a lot of them have become very gun shy. And they're changing the trade terms they offer to SMEs. So a lot of these SMEs that would normally come on board and that offer trade terms to, sure, here's an invoice, pay at the end of the month, 15-day terms, 30-day terms, etc. All of them going on COD. All new business goes on to COD. So we're seeing a lot of these larger businesses that usually offer quite flexible terms to their SME customers, suddenly pulling back on the credit dramatically. And if you think about the timing of this for a small business, they've just been massively hit on the cash flow side, if we go back to that. And then the behavior of their suppliers is suddenly pulling back on the trade credit, which is, as probably most people here know, is one of the largest suppliers of credit to small businesses globally, if not Australia as well. So that behavior change in the sort of the supply chain going back one step is going to have quite a significant impact on SMEs as they try to rebound after the pandemic.
Yeah, I think just to corroborate some of what you're saying from a customer point of view, and what we've seen is definitely from our wholesale customers are significantly more prepared. They're needing to stock up, you know, months before previously. So we definitely are seeing a change in the patterns on the wholesaling side because of that supply chain difficulties. So I think that's definitely going to be a trend that we're going to see definitely towards next year. We also, I think, Sam, so you mentioned some of the points around experiment and pivoting, and it's been incredible. I work with our frontline teams, and it's just been incredible to see how some of our small businesses have really innovated through this period. And you triggered a customer that's they're a bar, and they've as soon as they went into lockdown, they started producing their signature cocktails in 1 liter bottles, and they have literally just skyrocketed their revenue over the last couple of months, and it's just been a phenomenal success story to see that. And we have so many examples. We've got another retailer in Melbourne who sells baby clothes, and when we went into the first lockdowns last year, she moved her entire business online, and she's now seeing 4x times revenue a year later. So I think that online shift, we see it across all of our customers. We're finding customers to move their businesses online. It's a huge shift, and not just in your traditional industries. We're seeing it literally across all industries. So I would say that probably is a big trend as well.
Yeah, and I think there's been a lot of the points I agree with. Almost everything everyone's talked about, we've seen as well. And the only thing I would add is what we've seen is the shift to B2B sales happening online. So it's a big change, and it's happened on the consumer side gradually over many years. I think what we've seen now is this big shift happening where you start to get the suppliers on board, you start to get data flowing, and that data starts to build benefits for the larger companies and for the larger suppliers. And so we're just going to see an acceleration of that shift of B2B transactions occurring online.
Thanks, everyone. There's some interesting points again, and quite a wide range of interesting anecdotes, as well as the bigger trends that we're seeing in the market. One of those big topics that we touched on earlier is around cash flow and business lending. So I wanted to deep dive into that now. What are you guys seeing from a business lending environment perspective? There's statistics out there and IBA papers, RFI data, other survey information showing that it's still a very challenging environment for businesses to get access to credit, and in fact has been increasingly challenging since the sort of mid 2010s. So I wanted to get all your thoughts on that environment before we move into the conversation about what's next for business lending and where's the innovation going to come from. So maybe start off with what the business lending environment looks like, and then talk through the next stages and what's coming up.
I don't mind kicking this one off. Look, we've done a lot of research on this recently. We launched our loans product in May, and it is incredibly challenging for small businesses to access, credit. These businesses have, traditional players require you to basically go through the process as if you were, asking for a home loan. So having to go through massive amounts of paperwork, having to prove, many months of previous trading history, having to put up equity to access a loan. And sometimes these can be really small loans that traditional players actually are not even interested in touching because they're small, they're too small. So we know the process can be very cumbersome and takes a really long time. And Tom, that point that you made about larger businesses changing their credit terms to smaller businesses and B2B, we know now is such an important time for small businesses to be able to access credit. So it's, essentially to answer your question, Amit, what we know is that it is a really cumbersome process, and even those barriers to get to that process can be very difficult for small businesses, especially those that are starting up. So I mentioned a data point earlier, but traditionally 1 in 4 businesses have only been able to access formal lines of credit, and that becomes a lot less when you're a younger business owner or you're female. So it isn't equal playing ground, and so we think there needs to be a lot of innovation in this space, and it needs to become a lot fairer. To make sure that everybody has access and has the same access, and a lot faster as well. These decisions need to speed up, and I think that's been a massive issue during the pandemic as well.
Like, I can talk. I think, Sam, I agree. I think the sentiment is really strong out there that if you look at a small business, they're not a consumer and they're not a large business. And so traditional banks have got them lost in that space. But I think what the providers and what the people on this call have created is we've got these now digital first companies, and what we're providing to small businesses is a chance to get quick decisions. So someone coming to us, we've been able to get around 70% of our customers to get a real-time decision. And the reason we've been able to do that is because of organizations like Patrick's, where you're getting quality data coming through. And so for small businesses, it's hard, but the innovation is coming through now. There is a light at the end of the tunnel. There's an opportunity for them to seek financing that is not in their personal name, that's not, secured against their house. There's a chance for them to come in, and organizations are understanding what's happened through COVID, and we're there to support the Aussie businesses as they're opening up. And so it's been a really hard ride. It continues to be a time where a small business needs to really find the right providers and provide, and then stick with us, and we support everyone as they're going through and as they're growing.
I think I'll add to that. Speed absolutely is critical for our small businesses, especially. They need to make quick decisions, they need to move fast, and the opportunities to grow need that 24-hour turnaround time. So that's absolutely number one. But I think what's even more important at the moment for small businesses is flexibility in lending products. So we can see across all of our data and insights, even across sectors, industries and geographies, different businesses need different types of products, whether it be a fixed term loan or a line of a credit facility, and different types of terms. So that's why we do things like our 8-week no repayments promotion at the moment to help businesses through that. That's super important for our retail customers and a number of our customers. But it really does come down to looking at each industry, each business, and working out the right product for them, for their needs at that point, to support them with their cash flow and growth.
Yeah, it's a really good point. We talk about quick decisions, and we talk about being very unique to each individual. They're very different. They're all unique businesses, and we have to look to that uniqueness to make credit decisions. But what's also really important is that the product we provide to those businesses is fit for purpose for what they're after. It needs to match what their actual needs are. And not just in term, not just in cost. It's actually the style of the product, where it's a overdrawn line that can keep being drawn down again, whether it's supply finance or trade finance or a term loan. It's really important that we treat each individual not just as a unique business on the credit side to make a quick decision and make a good decision on that credit, but also from the product and the fit for purpose loan that we can provide that particular customer.
I'll just add very quickly, obviously not a lender ourselves, but we've seen, we saw inquiries drop right away. Businesses, I think, particularly small businesses, just went, geez, we don't want to touch debt unless they were really desperate to. But we've actually started to see that tick back up, which I think is a real positive. Comes back to that certainty. We ran a survey, and businesses just went, we don't want to take on anything until there's some clear goalposts there to aim for, and they've certainly got that now, which is great.
Cool. Again, very interesting points there. I wanted to focus in on one particular area of, innovation around business lending. And buy now, pay later, of course, we've seen it take off in the consumer space, firstly in Australia and some of the Western markets. We're seeing a takeoff in many of the emerging and developing markets. Certainly here from Asia, we're seeing it grow quite rapidly in Singapore as well as in Hong Kong. I wanted to ask, particularly Geof, I wanted to get your thoughts on this. I know it's all over this one, but the success of buy now, pay later, can that be replicated in the business lending space? And what are you seeing there in terms of what's coming up and what Zip's got in play for that space?
Yeah, so the answer definitely from my side is a strong yes. So Australia is a hub of innovation in what we've created around buy now, pay later, and what we continue to do. We've created this ecosystem now where we've found out on the consumer side really strongly how to find that golden moment between the merchant and the customer. And so as we look at the B2B trend, it's how do we create and recreate an opportunity that helps drive value for both sides and helps to grow that over time. And so at Zip, what we launched around 12 months ago is a buy now, pay later solution for small businesses. It allows the merchant, of which we have around 40,000 here in Australia, allows the merchant to become the customer. So they can use the product to be able to pay for, goods that they're buying directly from a B2B store. They can use it to pay bills, invoices. They can use it where they want, and they can do it on flexible payment terms. Because what we heard from businesses, and I think everyone on this panel has talked about similar themes, is they want transparency and they want flexibility. And so what buy now, pay later at its core essence is, how do you create that flexibility for the buyer in a way that's transparent, that shares the costs? And buy now, pay later on the consumer side has done a great job of disrupting the broken credit card model. There was hidden fees, there was large interest costs. People didn't know what it was going to cost them over time. But what buy now, pay later has done is simplicity. And so as we bring that same principle to your micro, your small, and your medium businesses, there's this opportunity for them to capture that and to get the benefits. The fact that Zip Business is used at any of those 40,000 merchants, they can come in and they can use it anywhere. So they're building off the innovation that's happened in the consumer side. So yeah, definitely from my perspective, I'll strongly say that there is a really big opportunity in buy now, pay later for business.
I'll jump in if I... Yeah, I'll jump in. I couldn't agree with you more, Geoff. I think there's a huge opportunity for small businesses to take buy now, pay later, and for that to grow in this particular area. It's important to remember that businesses have been using buy now, pay later for over 100 years. It's just been called an invoice or trade credit. They buy it, they get the stuff, and they pay later. The problem is there's a lot of issues with this model. You've got the supplier has to get to know each customer individually. They have to make the assessment. They take credit risk, late payment risk, operational overhead, all of this stuff just to provide that trade credit to the SME. They also know that as soon as the limit with them is tapped out or the customer's late, then the customer will go and use the limit with their competitor across the road. So it's not perfect by any means for the supplier. And then you look at the customer side, the SME making the purchase, they've got to go through this process with every supplier to set up an account. They've got to prove themselves over and over again. And then they've got to manage all these multiple different accounts with multiple different suppliers. We talk about managing cash flow, and we're just making that more and more complex. We now look at what buy now, pay later can do to the consumer space and bring that into the business space. It takes all of that credit risk off the supplier. The supplier gets paid up front. They get that certainty that we talked about before. They don't have to worry about late payments. And they also know the cost of offering that credit. Whereas when they're offering trade credit or their own accounts, it's quite variable. There could be write-offs, there can be late payments, there's the cost of the money to themselves. All of this is now that certainty. There's a certain cost in terms of offering that. They also know that if there's another 100-year event or once in 100-year event, that as a millennial seems to come along every 10 years in my lifetime, they're not left without cash. They know they'll get paid. We now look at the customer side and they get a limit they can use at every merchant. It's much easier to manage. And it also gives them the flexibility for their cash flow. I think there's going to be two main differentiators between what we're seeing in consumer space and what we see in business space with buy now, pay later. And the first is that we've talked about, and Geoff mentioned it, is the flexibility for the business. A standard 4 fortnights or a set schedule isn't going to suit a business. That cash flow is a lot more lumpy than a standard employees or consumers. So they need to have control over that repayment schedule, over the flexibility of their repayments. And they need to be able to make those decisions on the fly as well. It can't just be a set and forget decision. And then the other part is the suppliers often use trade credit as an important part of their relationship, an important part of that relationship building and sales for SMEs. So it's going to be really important that we allow that supplier to control and maintain that relationship with the customer in order for buy now, pay later to be successful in the business space.
Final question as we look to wrap things up around innovation. So what are we seeing in terms of innovation in the lending space beyond some of the things we've already talked about? So I guess wrap things up with a fairly open-ended question there in terms of further areas of innovation in business lending that you're seeing.
Yeah, definitely. I can talk a little bit about what we're doing at Prospa. And we've been working with small business owners for nearly a decade now, and we know that small business owners are incredibly busy. They're inundated with admin tasks, and they really want to spend the time doing what they love, which is running their business. So where we see innovation is really looking at how do we reduce those admin tasks and bringing all of the things that small business owners need from a finance perspective into a single place. And that's why we're building our all-in-one transaction account, which will bring together the lending products, the finance management, the bill payments we spoke about, and payments in a single place to really make it super easy for business owners to operate.
I could probably touch on a few innovation pieces that we're launching as well. We talked before about the importance of trade credit within the SME market and the reticence of a lot of large suppliers to offer that trade credit just when they need it most. We also talked about the importance and the potential for buy now, pay later within the small business market. And this is why Finstro is launching a small business buy now, pay later product. But it's centered around allowing large wholesale suppliers the ability to offer trade accounts and trade credit to their SME customers. For those SME customers to get an account at any one of their suppliers in under a minute with a click, and then access buy now, pay later on any purchase they make at those suppliers. So it's giving the control and the flexibility back to the supplier to control the relationship, to own that relationship, and the customer to manage their cash flow, manage the payments, and use the power of buy now, pay later.
I think something I might add just to finish off there is just in general from an innovation perspective, and it comes back to being forced to do it, is how much leaner every small business is running at the moment, but also looking to embrace that technological change and get data into their business, even if they're a small manufacturing business in the western suburbs of Sydney that traditionally was having people on the road knocking on doors to sell their goods. Even the most non-tech businesses are starting to embrace that technology and data that's available to them. And I think that what that naturally does is serves the business to be a lot leaner, but also makes them more attractive to lending in the future, as they can share additional data. Gone are the days where you would only share, your balance sheet or the, the equity you had in your house. You're actually able to start sharing other bits of data that, non-traditional lenders or alternative lenders like the panel we've got here can actually look at and assess and see the value in. So I think that's a great thing to see. And on top of that, the integration with the likes of accounting platforms and the embracement of cloud accounting too.
Yeah, I'll go second last, leave Sam the spot. So I think some of the really exciting things that we've got coming out, and over the last couple of months, we've been releasing a lot of new features. So last month, we released the ability for anyone to be able to access their line of credit through a Visa card. So you can use it in your digital wallet, provision it, tap it anywhere. Last week, we expanded that to have a single use card, so you can now use it for purchases online. And as we keep growing out that functionality for our businesses, customers, and their employees, it's how do we start to make that simpler and drive employee cards and spend management. So how do you make it so a business can have it so they can transact anywhere, and Zip will be their first payment choice, but then it's really simple to onboard, really simple to use, and then really simple to reconcile. And so we're pushing ahead in a lot of innovation of how do we drive that digital experience around the employee and the everyday spend.
Yeah, to wrap things up, where we think the key focus of innovation, it hasn't really changed for Square at all, is about, for us, it's about providing an ecosystem of solutions that help businesses start, run and grow. So as Margot mentioned, we know that small businesses and all businesses of all sizes are running many, many different programs and solutions to run their business, whether it's managing their stock, whether it is managing their staff, whether it is, managing their bookings. And so what we think is really important is obviously to have really great, remarkable solutions that help them do those things, but to do that in an ecosystem that is very cohesive, so that a business can run end to end in a really simple way and do less admin, as Margot said, and spend more time actually running their business. And so that's a really core focus for Square, is that we try and do as much as possible first party, so that it is a very much an end-to-end ecosystem solution for sellers. But we also integrate absolutely with third parties like accounting software, where we know there are people out there who do it a hell of a lot better than we can today. But we do a deep integration to make it really simple, so that once again, a seller can run one report to see, you know, what they've sold online and in store and in person as well, and make that really simple for them so that they can spend less time on admin and more time running their business.
Fantastic. Well, thank you everyone very much for your time. I think we've maybe just gone a little bit over the half an hour mark, but it's been a very worthwhile and very interesting discussion. So we'll wrap it up there, and thank you very much for your time. Cheers.